If I was an investor in the residential property market, I would either be holding or buying at this point in time.
I thought I'd get together with John today and talk about the property market in Western Australia, considering we're going through a turbulent time, I guess, economically, not only in Western Australia, but Australia generally, due to COVID-19. John, would you like to share your thoughts on where you see the property market right now in WA?
Look, I think that if we look back at 2020 generally, I think that what you'll notice from the data is that the property market, after 6 years of fairly depressed and challenging conditions, all the fundamentals were heading in the right, had stabilised, were heading in a positive direction.
Sure.
So certainly the year ahead looked very, very promising, and certainly I think the sales activity in the marketplace reflected that. Then of course COVID hit, and that disrupted all the fundamentals whatsoever. But we've seen here in WA there's been a very quick recovery in the market conditions, and as you know, in the rental market it's almost rock solid in terms of vacancy rates and returns. And in the sales there's been a hiatus of activity over the last, say, 60 days, which is probably a clearance of the post lockdown period demand that was built up, this possibly clearing at the moment.
Okay. And so why do you think, obviously at home opens right now, we're seeing a lot of buyers coming through the home opens generally, in general terms, and we're seeing lower days on market. We're seeing a pretty fast turnover of sales, and obviously applications for rentals is, multiple applications and multiple offers on properties generally. Why do you think that is at the moment?
I think it goes back to those fundamentals at the beginning of the year that were all very positive. So essentially the WA property market is at an inflection point at the moment where supply is not being managed to equal demand. So although we're not in super demand, but we are in a demand that's exceeding the demand in relation to rental properties available and also in terms of properties for sale. And what I think has happened also during the COVID period, a lot of people have reassessed their expectations around their home, their second homes. They're wanting different types of accommodation, different types of security, and as a consequence there's a lot of readjustment happening in the marketplace. I think we've also had a fair amount of, although I haven't seen any of the data, net migration into the state for obviously employment purposes, and so that I think has fueled the rental market and the purchase market as well. I guess right now the actual population is quite stable at the moment, other than people coming into the state for these work opportunities. How much is that influenced by the economy and the resources in WA? Look, I think once again we're all aware that there's a certain uniqueness and robustness around the WA economy. Obviously the COVID situation here is quite positive, although we're only one step away from a possible surprise. But the reality is that there has been good underlying employment here in WA. That's not to say there isn't rising unemployment. But generally speaking, we have other fundamentals, such as the availability of affordable money and a demand that's above supply that's certainly fueling the marketplace at this point in time.
Yeah, right. It's interesting because obviously interest rates are pretty low at the moment. Probably money is the most affordable it's ever been, for a long time at least anyway. How do you see that in relation to investors coming back into the market? Because obviously owners at the moment, a lot of owners are kind of wondering whether to come to market or not. We see it, and that is seen in the supply. We've obviously got a restricted supply at the moment. And so there's people wondering, well, do I sell right now or do I buy? It's a funny time in the market. Where do you see that at the moment?
I think if I was an investor in the residential property market, I would either be holding or buying at this point in time. I think the challenge for people wanting to buy in the investor marketplace right now is competition, particularly in that price range that they probably would buy with first home buyers. So if I was an investor, why would I hold? Well, the reality is that we've had subdued rental returns for quite some time and fairly elevated vacancy rates. We now have effectively a 1.6% vacancy rate, which in practical terms is a zero vacancy rate. So you're going to have your property occupied, so security level is good. The underlying value of your asset is good because obviously we've got a rising market here in WA. And so therefore then we need to look at the yield. So I think rentals have stabilised. The likelihood is rentals will progressively increase. So security is good. And yield is better than other places, and so we generally have a participation rate in the WA market around 27, 28%. We're sitting down at low 15%. So it's inevitable that will rebalance itself, maybe back up to 20% in the medium term. Okay. As you said, affordable money. Low interest rates, probably the interest rate is lower than the yield that you're getting out of rental properties at the moment. I think it's a very good time to be thinking about investing in the WA property market, no question. Okay,
that's great. And I think that's sort of, that's along the same message as what RP Data has been communicating in recent months about the Perth market, is that we're the most affordable capital city in Australia, and with high yields for investment, it kind of makes sense that buyers should be getting back into the market. I'm quite surprised actually that we are at 15% investment levels, whereas it's normally at sort of 27%. So I think there's obviously a lot of people waiting at the moment, not sure what to do, obviously given what's happening with COVID. I certainly feel like it's a good opportunity to buy into the market right now. And I'm very aware of, obviously all the rah-rah real estate agents speak around sort of buy now, but I really do think the fundamentals are there as well. Would you agree?
Yeah, I think, if you like, looking past the rhetoric and the spin, I think you've got to look at the data. And the data, as you said, says that properties in WA are the most affordable in Australia. At the same time, you've got a highly stabilised rental markets. You've got available, affordable money to buy these properties. So on just facts, logic, it makes sense to be thinking about that. There's no question about that.
Yeah, okay. Yeah. And I guess just a question in relation to regional markets versus the metro market. What are we seeing? Obviously, Realmark have got offices in Broome, and we're working to Port Hedland and down in Dunsborough down south. Where do you see kind of these kind of regional markets head in the next, even now and in the next 12 months?
So what I can tell you in all of those markets, Broome, Dunsborough, Karratha, Hedland, all of those markets where Realmark has representation across WA, all of those offices have a hiatus of activities from both renters and buyers at the moment. Okay. And when I speak to them, it might be down in Dunsborough, people are buying lifestyle properties or looking long-term to migrate back into WA and looking for that alternative property. So there's been a big focus on that sort of opportunity. And by comparison in Karratha, where supply is a real question, our office has obviously been able to list a lot of good property, and the transaction volumes are very solid. And none of the principals in those offices are suggesting that's a short-term thing. They believe that the fundamentals there, because of the economics behind WA's economy, the long period of underproduction or undersupply of dwellings versus the demand that's now consolidated in WA, and the overall confidence level, even though it might be a little bit fragile because of COVID, is certainly fueling those markets. And the funny thing is, you've got to look at that anecdotal information to know when to move in the property market.
Sure. Okay, I guess reverting back to the Perth metro market generally, and obviously we don't have a crystal ball as to where things are heading, but we at Realmark, we look at a lot of the data that's given to us, especially from CoreLogic, one of the biggest research companies in WA in relation to property, in Australia in relation to property. Based on, I guess, that information, that data, and I guess some of the forecasting, what we're seeing on the ground here in real estate land, where do you see the next 6, 12, 18, 24 months in terms of both property investment and people trading, buying and selling?
Yeah, look, I think we're in uncharted waters at the moment because of COVID. And so I think there's a degree of fragility in terms of people's confidence levels. And obviously that could be affected by things that are going forward. But obviously as we go forward here in WA, I think we see that things are normalising, confidence levels are normalising, and that's a good thing. I think there's an underlying strength in the economy, medium to long term, and I think that shows a lot of data that's flowing through. Okay. I think if we look at some of the anecdotal information, that's maybe not clearly obvious, and we look past, if you like, this just little hiatus of activity that's occurred in the marketplace at the moment that people are very focused on. I think that's a bubble that's passing through. Okay. But as that normalises in the month of August and September, I think what we can see is that if you look at the inquiry levels on the portals, it is a positive, rising and consolidated, elevated inquiry level across the board right from the beginning of the year. There was a very short downtime during the COVID shutdown, and then it recovered and is continuing in that trajectory. So I believe that the underlying demand for properties and interest in properties is acute at the moment. As I said before, we have an inflection point where the supply is going to lag behind demand.
Yep.
And so it is inevitable that there will be price adjustments both in the rental market and in the selling market over the months and quarters ahead.
Yep.
How things will be in 18, 24 months' time, I think that's a fair stretch out.
Right.
But generally speaking, the data would suggest that if you wanted to be any property market in Australia, WA and Perth in particular would be one of the best markets to be backing at this point in time.
And that's coming from CoreLogic as well.
It's coming from the data from CoreLogic, there's no question about, but also other sources such as REWA, the portals and that sort of thing. So, it's not just one source.
Sure.
I mean, that is the biggest aggregator of data, but it's being reinforced by every bit of data that you look behind the scenes. Yeah. And I think at Realmark, we've always been very focused on not getting emotionally reactionary to a moment or a weekend or a month of activity.
Yep.
We're looking constantly at the data to be able to give our sales consultants, our rental agents and our clients the right advice going forward. And we've been very good at that over 6 cycles since Realmark's been trading.
Okay. And obviously my interest is in the residential sales area in Realmark, but I guess across the board we look after property management for clients, got a lot of residential landlords that we look after. We've got commercial clients we look after. We sell a lot of commercial property as well, and we do the strata management as well. Right. How do you see the market affecting the commercial market in the next sort of 12 months? Have you got any sort of ideas around that?
Obviously in WA, the commercial market's been in a really challenging space for a long period of time now, post GFC, post mining and all that sort of stuff. Certain sectors have certainly been affected more than others. I think we're all aware of the impact on retail at this point in time. Obviously, the COVID shutdown has had an impact again on the office market, which was obviously already very, very challenged. And other sectors like industrial have been very, very good performers. What we are seeing, however, is that serious players are certainly in the marketplace at the moment, competing for opportunities.
There's obviously more confidence out there, right?
No question about that. Money's affordable. They're looking at the long term. They're looking at the data behind it, looking at the economy, and they're certainly in there playing at the moment. And even the retail sector, that people would say is very challenging. What we're saying is it's allowing for a readjustment, a resetting of that. And across the board, we're doing some very interesting transactions in that space as well. So generally speaking, yes, there's a recalibration happening across those markets. But once again, I wouldn't be pessimistic about those markets. I think you've got to be certainly being serious about those opportunities as well.
So I guess we're hearing a key message of optimism amongst a lot of the turbulence.
Considered optimism, I think. Well-founded optimism. But let's not get too excited. Let's understand that this is not just a month, but it's likely to transition, and it could be a little bit volatile up and down as we go through this period. But I think that the direction is steady as she goes and potentially positive as she goes.
Yeah, that's great. I think that's a great note to finish off on. Thanks for your time, John. Appreciate it. Thank you.
Bye.
Cheers.